Hello, guys, and welcome to 21metrics podcast. I'm here today with my quad, Juhani. Welcome, Juhani.
Yeah, hi. Nice to be here again.
And we are about to discuss Bitcoin and cryptos and deities today, plus macro, everything related. But first, please check our sponsor, Sajid.ai. I will add the link to our show notes. It's the easiest way to shift your crypto. But yeah, let's jump to Bitcoin. So Bitcoin is dropping again. And actually, when we look at the chart here, we still have some whale buying, like the brown one is indicates wells and a read that is selling. So, Juhani, do you see we could drop below 100k, or how do you see this playing out?
Mm. I think it just like depends on the tech stocks like Nvidia and because just still like I think that the sentiment has changed more like barriers that people start to feel that perhaps data center stocks are like overvalued with the chip makers as well. So that might lead to lower, let's say, valuation in Nasdaq, and because we know now that Bitcoin is basically almost 90% correlated with where the Nasdaq goes. So if it continues to fall, let's say if there would be, let's say, tech stocks like 10-20% correction, then we could see Bitcoin somewhere in 70, 80K quite easily, I think.
Yeah, yeah. So correlation with tech stocks, and this year Bitcoin has been very correlated with Nasdaq, as you said. So we'll see. I still believe we could see like a bullish Q4, even Q4, Q1 of the 26. But let's see. Let's move forward. So this is like the realized price for short-term holders. So this indicates that like short-term investors, traders are currently at loss, and they're taking like heavier losses. But when we look at the like long-term holders, maybe more like me, who has bought before, accumulated before, we are still at profit, almost like 200% on average. So this is like the divergence here, and I think like short-term holders are a bit in panic maybe. We have people who bought at the all-time high of 126k, and they're now at loss. So we'll see. And at the same time, as I'm sure you only know that we have like OG whales dumping coins, and then we used to have this like institutional buying, but actually right now the treasury companies are not buying that much. So this is like the market structure right now, and
Yeah, actually, I think it's kind of like the support is kind of like missing from the buying side, and then
yes.
when people let us sell, then price have to fall, right?
Yes. So treasury companies used to support the price, but now we're seeing them also dumping the coins because they have to. It's like forced selling. So interesting setting. But we can move on to macro, and this is like the M2 and Bitcoin. So like the global money supply and Bitcoin, and here we can see that Bitcoin is now lagging behind the M2. It used to be very correlated with the M2, as we all know. How would you interpret this, Juhani? Like,
Mm. I think it's
will
just like
Bitcoin catch up?
general risk pricing. I think a bit because like we have seen Nasdaq also falling, despite the fact that it normally follows the liquidity. I would say because I also see my estimates that liquidity is still increasing, and
Yeah,
it's kind of like should be like supportive for Bitcoin, but at the moment there's like selling pressure. I think, but it
yeah,
also might be that it's just cascades from the tech stock market. I think, especially data centers where there's like narrative that there is a like bubble. So if there's major correction in that side, then they will sell also crypto, I think,
yeah.
because they are like correlated assets. Then I guess some people are using Nasdaq as a hedge for their Bitcoin. I guess it might be some institutions, for instance, then causes more selling. I think.
Yeah. So we could see Bitcoin catching up with M2, but we will see the market.
Yeah, because I think it's also like the fundamentals, right? That we discussed over this year a couple of times that the fundamentals of Bitcoin have been really terrible, like on chain level, and that continues to still to deteriorate at the moment. So I think it's just Bitcoin has been more trading the fundamentals now and deviated from the liquidity, let's say, narrative.
Yeah. And as we discussed, Juhani, we both see this shift towards infra tokens. So like Bitcoin still, of course, like the leading cryptocurrency and the biggest, but there's still like this shift going on in which like tokens like BNB of Binance and Hype of Hyperliquid are performing very well. And through these tokens like the Binance coin, you're basically like buying the Binance stock basically, and that it's kind of like you're investing to the exchange platform and the whole ecosystem. And like I think as the industry matures, these like infra tokens will be even more important. So it's like changing landscape.
Yeah, yeah. One could say like the asset pricing of crypto has changed because in the past we normally price everything against Bitcoin, I would say, but now it's more like that. Actually, the underlying, let's say, business or the structure that you are getting yourself into is like more like the matter that matters more in the for the tokens, at least in the last 3 months, at least when the market has changed a bit. I would say it's not anymore trading so strictly with the liquidity.
Yeah, we also live in this platform economy nowadays. So and that you also seeing like Robinhood up by almost 300% this year. So these like stock
Hmm.
platforms, it's also nowadays a crypto platform, but we are seeing these succeeding. So and I think like Binance has grown into such a significant player in the industry. So it might even kind of like BNB might kind of like eclipse Bitcoin a bit. So yeah, interesting times, and at least I would say like the difficulty is up. So it used to be so easy in previous cycles to buy in like 17 and 21, just buy whatever Dogecoin and it pump, but now it's very different. And I think like the whole market pricing is more is different right now, as you
Yeah,
mentioned.
exactly. That's like my opinion as well.
It is
That's
been
kind of like,
priced.
yeah, especially in the last 4 months, I think there's like sizable shift.
Yes. It's also, I think George Edwards said, I have been listening to his podcast a lot. He said that now this is like institutions now driven market, and before we had retail, but institutions are now like pricing the market, and you kind of like see that if you really have a good product, a good token like BNB, and it's like a plausible investment thesis, then institutions will buy it, but they also dump like poor quality tokens. So I think we are seeing like this better pricing going on right now. So it's like
Yeah, and that probably makes it more like related with stock market returns as well, I think.
yes,
Because if you start to price all these tokens by the business model, then I would expect that the risk premium of investing digital assets should be more similar to stocks, I guess,
yes,
or other
and
securities. Yeah,
yes, agreed. And retail is wrecked after the 10-10 event, 10th of October.
yeah,
Like many,
yeah, for
a
sure.
lot of
Yeah.
retail got liquidated back then, and they're still not like they're like offline away from the market. So that was like very brutal day,
Hmm.
Friday 10th. But
Yeah, for
let's move
sure. Yeah.
forward. This is my chart. I wrote this for crypto quant, and we are seeing here that like Binance has now a lot of tether, a lot of stable coins, but actually like the Ethereum tether like reserves are replacing Tron basically, but like bullish on stable coins, bullish on Ethereum based stable coins basically. But let's move forward to DATs, digital asset treasuries. This is a big theme that now we're seeing like Ethereum based treasuries eclipsing Bitcoin related ones here, but the performance has been pretty poor. If you look at Metaplanet treasury company, it's basically done the round trip and back at the support here. How does it? Are there like too many deities? Can they survive? Or how is it playing out, Johanny?
I think a lot of them are just so levered that if there's like small draft down in the Nasdaq, that they basically collapse, like we have seen in MSTR, for instance. That we were trading somewhere 400 plus, and now we are 250 or something like that in the morning. And I think the same thing is able to be seen here as well. Like the peak is somewhere July, I guess, and then thereafter it has been just a constant draft down basically.
Yeah. Yeah.
So that's kind of my general feeling that these companies have just continued to issue loans and now they are super levered. So if there's even small draft down, then they are really like hit hard.
Mhm. Yeah. Agreed. So be very careful when buying these DATs.
Yeah, I wouldn't touch any like crypto native companies until they trade similar levels like 2 years ago, I would say.
Yeah.
Because a lot of them had made like 10,000% like this one as well. If
Yeah.
someone hold it from 23 onwards, right? And I think it's at this stage of market it's better to let's say wait 6 months and see if you get things really cheaply.
Yeah. Agreed. And then like MSTR strategy, they're still buying. So this is normally being like the leading indicator to the underlying asset, which is Bitcoin. So there's still some buying on, but it's slowing down. You can now see the peak there. So this might be one indicator if you look at like the spot market peak of Bitcoin. If they would stop buying completely, then we might move into bear market. But I don't know. It's hard to say yet.
Yeah, I think we will see it in a couple of months. I think they're not trying to raise still capital, but I'm not sure if the demand is there if people know that there's large draft down, right?
Yeah,
Yeah, risk, basically.
yeah. So they have usually been like pro cyclical. So you can see like the previous years there, during like negative phases, they haven't bought that much, and they have now bought more when spot price is up. We'll
Mm.
see. Do you see like the MSTR structure? Do you think that's like feasible? Will actually, or do you think they will eventually need to sell coins? Or how do you see it? Like, is it
Yeah,
sustainable?
I think it just depends on the bond market. If something happens in real estate, that there has been some, let's say, defaults in the US in recent months. That's why we have seen the large draft down in private equities like KKR or Blackstone as well.
Yeah,
So if something would happen bond market that they cannot issue more bonds, then that would be problematic because then everyone would be selling at the same time, right? Because all these similar companies wouldn't have access to bond market to issue more debt than buy the coins, like
yeah,
they have so far done in the last 24 months.
yeah,
And because we know already that some smaller, let's say, treasury companies have already like not defaulted, but kind of like sold a lot of coins at the loss. And there's also like kind of indication that MSTR would be like the peak of the iceberg, I would say. Like if the other ones have already like failed, then the large ones would be like still waiting, I think.
yeah,
But if there would be really like, let's say, slowdown in credit lending or tightening the credit standards, then that would be really problematic for MSTR type of companies where the model basically is assuming that you can issue more debt all the time.
yeah. Agreed. Okay, thanks for your insights, as usual, Juhani. So I think we can wrap this up. But
Yes.
interesting times. Be careful, especially with DATs. The spot market is coming in Q4, maybe in Q1. Don't use leverage. Don't get liquidated. What else can I say?
Yeah, that's kind of like it's. I think so. Yeah.
Thank you, Juhani, and till next time.
Yeah. Thanks a lot. See ya. Bye.